everyone, this is not an ASMR video. I just completely lost my voice, and this is the only way that I can actually speak. So I'll make this a quick video so you don't have to hear too much of this voice, and I'll give you a quick update. So for January 2025, I'm up about 4.35% on my capital since the beginning of the month. It's realized and unrealized. I have a new CW trade, and we have a CL position that is probably going to close next week, and I trade the futures options specifically. So let me go quickly over my strategy, and I'm gonna make a video specifically about my strategy. So basically I only share short strangles, 45 days or less, even though these past two trades were with over 100 days to expiration, or with 100 days to expiration, give or take, just because this was the better deal in this case. These are the products that I trade, all the way from gold and to live cattle. I usually go for about delta 20, and again, about 90% of my trades are short strangles. Now I use CVOL for my entry, so this is the commodity volatility index. This is like the Bible for option traders. And here you can see all my other essentially rules for the strategy. And I'm always looking for a good opportunity where the risk is worth the reward. This is basically it. I promise I'll make a video detailing much more. I'm pretty sure most people don't want to hear that voice, my voice right now, talking for too long. So this is my card position on CL. It was open about 12 days ago, and it's up about 37.5%. It's been a good position, and I got a bit more credit than I wanted. I wanted about 6%. This is about 6.7%, and I opened the position with about 103 days to expiration. Now the CVOL was great when I opened the position, and we opened a skewed strangle, just because these lines are the range to the stop loss, so these are not the strikes. This is essentially when the price, if the price of the underlying gets here or here, essentially the position should be out around losing about 50%. And as you can see, the price has been moving in this range since over a year, so this is why I opened it with 103 days to expiration as opposed to any other expiration. Well, overall the CVOL was up because there was a WASD report, the World Agriculture Supply and Demand Estimations report, and the exports and sales were much lower than expected for soybean oil. But these are news of the past. There's nothing fundamental wrong with the supply and demand going forward. So this is why I opened this position, and in just 12 days we're up pretty nicely. So I opened it on, when was it? On January 13. So let's see what was the CVOL in January 13. So we opened it right at the top, so it was a really good entry. The day after, actually CVOL went up first before going down, but as you can see, CVOL just dropped, so we got a really good point because this is not the top, but relatively it was a pretty high point. I was pretty happy with the entry, and there's no way to time the CVOL where you only enter at the very top. It was pretty good, and we are enjoying the position right now. Now the new position that I have opened just a day ago, or actually 2 days ago if you're watching it, it's up about 1.8%. It's a short strangle as well on wheat futures. We have 93 days to expiration, and you can see how massive the range to the stop losses is from the current price. And there was a good CVOL, which I'll go over in a second. The CVOL was high relatively for the past previous 6 months because there were some concerns due to the weather in Argentina and Brazil. Basically, there was concerns about not being enough, or not of Argentina not getting enough rain, and this can potentially impact the supply of the wheat. But it's not a big deal, especially they're expecting some rain. And as you can see already, the CVOL went down, and let me show you exactly what I mean. So as I'm filming it, I opened the position yesterday, or actually I think it was the 22nd, 2 days ago. Yeah, so it was at the evening of, I guess, of Wednesday. For the most part, we opened it right over here. So essentially I was waiting for CVOL to go down to kind of signal, that things might get cooler down a little bit. It's only been 2 days, and this is the 3 months range, and this is the 6 months. So even within the past 6 months, this was a pretty high CVOL relatively. So this is why I entered this position. And in this game, patience pays off. The more patient you are, the better you'll do. Because this whole game is about looking for opportunities, for good opportunities, and capitalizing on them. Thank you so much for watching. Next week my voice should be back to normal. So thank you again, and I'll catch you in the next one.